Hi everybody, it's Peter Schiff. It is Wednesday, November 3rd, 2010, the day after the midterm elections. As we all know, the Republicans won a very substantial victory last night. I think they picked up better than 60 seats at last count in the House, and I think 6 seats in the Senate. I think it is the biggest change of party since the Second World War. So clearly the public is upset and angered at the economy, and they're taking their frustrations out on the incumbents, particularly on the Democrats, the party in power. You know, much the way they threw the Republicans out in 2008, they're throwing the Democrats out in 2010 because the economy keeps getting worse. The question is, who are they going to throw out in 2012? Because one thing I'm certain of, the economy will be in worse shape in 2012 than it is right now, than it was in 2008. So is the public going to blame the Republicans in the House, or are they going to blame the Democrat in the White House? Because the problem is both parties have been pursuing the same failed policies of big government, of cheap money, of excess regulation, excess spending, excess taxation. Now, the good news is some of the Republicans who won really won on a pro-free market, pro-constitution, pro-liberty message. The question is going to be, will they be successful in influencing the Republican Party leadership to adopting those principles, and will they be able to fight for them, or is it going to be a return to the Republican parties of the policies of the past, which is going to mean who knows which bums they're going to throw out in 2012. You know, I thought one thing that is ironic is that part of the message that empowered the Tea Party was to rein in government spending. People are upset about the excessive government debt, as well they should be. But look at the news we got today out of the Federal Reserve. The Federal Reserve announced today the details of quantitative easing, or money printing. The Fed said that they're going to buy $600 billion worth of treasuries between now and June of next year. And who knows how many they're going to buy after that, but they announced this plan. Well, why is the Fed buying all these treasuries? The Fed is saying that they're doing it because they want to stimulate the economy, because inflation isn't high enough and they want it to be even higher. You know, this despite the fact that the CRB index of commodity prices hit yet another 52-week high today, and oil is now moving over $85 a barrel, looking like it can go a lot higher. But I think this is a red herring. I think the real reason that the Fed wants to print money and buy bonds is because that's the only way the federal government can sell them. You see, I think the federal government is having trouble selling its bonds, and the market is about to impose a discipline on Fed borrowing by driving interest rates higher. And so what the Federal Reserve is doing is monetizing debt so that the Treasury doesn't have to cut spending, so that it can keep on borrowing without any immediate pain, because the Fed is going to mute that pain by printing money, buying treasuries, and preventing a sharper rise in interest rates that might otherwise rein the Treasury in. In other words, the Fed is keeping the bond vigilantes at bay so the Treasury can keep running up big debts, which is exactly at odds with what the electorate is telling the country that they want. The people who were elected, all these Republican candidates, want less deficit spending, but the Federal Reserve is what's making it possible for the government to do more deficit spending. Now, part of the irony of it is interest rates surged anyway. Look at the big run-up we had in interest rates after the Fed's announcement. Now, it's my feeling that rates would be much higher already had there been no quantitative easing at all. But because of the quantitative easing, yes, it is delaying the increase in interest rates, but now interest rates are ultimately going to rise much faster and much higher because of quantitative easing than they would have risen had the Fed not done it. And of course, the consumer price index, the cost of living, is going to rise much, much faster, exacting a very expensive toll on the United States, on the average American. And of course, most people aren't going to make the connection between the higher price of food, the higher price of gas, and the quantitative easing and the deficits. But believe me, they go hand in hand. Now, I am going to talk more about the elections, both nationally, here in Connecticut, my take on it, what it means, also about the Fed and the quantitative easing and what it means tonight on my radio show at schiffradio.com. You know, if you're not tuning in and watching my radio show, make a point to do that. I do it every day at Schiff Radio, SCHIFF radio.com from 6 to 8 p.m. Eastern Time, which would be 3 to 5 p.m. Pacific Time. And if you don't see it live, if by the time you play this video blog, it's already run, you can go to the SchiffRadio.com and listen to the entire show in the archive format. And for a lot of people who watch the video blogs who complain that they don't think they're long enough, they want them to be more frequent, what you really want to do is go to SchiffRadio.com, because I'm going to be putting a lot more content on the radio show. Right now we're having about, 12 to 15,000 people listening online every day. I'm not sure how many people are listening on radio, but the online audience is about 12 to 15,000. There's about 40,000 people plus that listen or watch these video blogs when I record them. So that means a lot of you are not tuning into the radio show. You really should make a habit of doing that, because as I said, a lot of important content is going to be on that radio show that is not going to come into these video blogs. But also, I am trying to drive a much higher audience on the radio show because I'm looking for advertisers and syndicators. I want this show to be a widely syndicated show nationally, globally, and what is it going to convince the advertisers and the syndicators that this show is real and that it can have legs is my ability to attract and hold an audience, which will be shown by the numbers that I can show online and on the radio. Now, we don't have any real ratings yet on the radio, but I can track the online audience. We are able to tell how many people are listening online. So if you're not doing it now and you make a habit of tuning in, you can help me prove that there is a market for this show, that these ideas will resonate, that I can draw and hold an audience for a 2-hour show 5 days a week, because it is very important that I get my message out on a larger scale. And everybody who's watching my video blog can help me by also listening to the Peter Schiff Show on SchiffRadio.com. So make sure and do it yourself and tell your friends. Oh, one more thing I wanted to comment about today. We did get these job numbers from ADP that showed a net gain of, 43,000 private sector jobs that were created. But the problem with these numbers is that 34,000 jobs were lost in the goods producing segment of our economy. Now, we gained 77,000 service sector jobs, but the problem is we subtracted producers and we added consumers. See, more people are collecting paychecks, but fewer people are making things for the people to buy with those paychecks. So what does that mean? That means a bigger trade deficit, as these new consumers have no choice but to buy imported goods produced in other countries. That runs up our trade deficit, that further diminishes the value of the dollar, puts more upward pressure on prices. We are not going to have a real recovery until we start losing service sector jobs and replacing them with goods producing jobs. We need lots of goods producing jobs. The fact that we're still shedding them shows that our economy is still getting sicker. It's not recovering at all. And the only reason that we're not feeling the pain right now is because it's been numbed by all this money printing and all this inflation. But when that wears off, and it is wearing off, that's why the Fed is trying to drum up another round of quantitative easing, because it realizes that the last stimulus is wearing off and it's trying to inject another dose before we realize how much damage the first dose has done. But all of this is going to work its way through the system. Now, we are going to get the non-farm payrolls number from the government on Friday, and so we'll get the government's take on these numbers. But my guess is that they'll continue to be subpar. We'll continue to lose manufacturing, and I think we're going to have a stronger reaction. Gold sold off a bit today. The dollar was down on the day, but I think we're going to see a bigger reaction later in the week, next week, negative for the dollar, negative for bonds, as a result of what the Fed has done. And I don't think that there's going to be enough enthusiasm for the Republican victory in the House to offset the damage that is still being done to the U.S. economy by the president, by the Congress that exists, and most particularly by the Federal Reserve. Anyway, that's it for today. Don't forget, later today, tune in to Schiff Radio at SchiffRadio.com, 6 o'clock tonight, 6 p.m. Eastern. And if you're tuning in late and it's already over, just go to SchiffRadio.com and you can listen on demand. And also sign up for a premium service. We're going to have a lot of good stuff. It's only $4.95 a month, and the money that you spend will help offset the production costs of the program. Take care, everybody. Bye-bye.